We're going to talk about how to set up an estate plan when you own a plumbing company, buildings that you lease back to your company, a rental portfolio, a second home, and your primary residence. In this, we're going to talk about how to set up asset protection for all of your operations that you have going on, succession planning for your business so that your family knows exactly how to take over the business when you pass away. We're going to talk about how to set up asset protection for your plumbing company for any liabilities that you have so that they do not bleed over and take over your rental portfolio or the home that you and your family live in. We're going to talk about how to set up asset protection, probate avoidance, and succession planning. For the asset protection, we want to make sure that any liabilities related to your plumbing company, your rental properties, or your vacation home do not bleed over into your personal life and take your family home. We also want to make sure that tenant lawsuits do not bleed over and wipe out your entire rental portfolio. We don't want your business getting stuck in the probate process where your family cannot access the operations. We also want to make sure that your business and your rental portfolio does not get stuck in the probate process so your family is not able to access any of those assets. And we also want to make sure that your family knows exactly what to do when you pass away so your business continues to operate effectively. The first thing we're going to do is set up a revocable trust. This is going to be the foundation of your estate plan and allow you to have centralized control over all the assets in the event that you become incapacitated or you pass away. The things that we're going to put inside the revocable trust are going to be things like our family home, our rental properties, or the LLC that holds the rental properties, the LLC that holds our plumbing company, financial accounts, things like checking, savings, and investment accounts, and vehicles, trailers, and tools that have any significant value or if they have title to them. With our revocable trust, we also want to include a pour-over will, which will take into account any assets that we forget to or don't have time to put inside of a revocable trust. It will send those assets through the probate process and dump them into the revocable trust on the back end. We also want medical and financial power of attorneys in the event that we become incapacitated for whatever reason. Our family will be able to take over the management of the assets and make medical decisions on our behalf. If we don't have these documents, your family's going to have to go to the courts to get authority to make decisions on your behalf in the event that you become incapacitated. And we want a HIPAA release form so your family can actually access your medical records. Without these documents, your family is going to be blocked from things like paying bills, running your business, or even speaking to doctors in a health emergency. The second thing that we're going to do is add a layer of asset protection using a combination of LLCs and irrevocable trust. Now, this sounds complicated, but we're going to break this down into two separate sections. The first one's going to be the plumbing company and then how to handle our rental portfolio. For the plumbing company, we're going to set up an LLC, taxed as an S Corp. That way we reduce our taxable liability. We're also going to draft a buy-sell agreement if we have a partner that we want to sell the business to or we eventually want to sell that business to another individual, even if we don't have that planned out yet. If your personal net worth is pretty high or you want to have asset protection for your business, you can put it inside of an irrevocable trust. There's a couple different benefits of this. The first one is that your business will have asset protection from any of your liabilities. So in the event that you have a divorce, you get in a car accident, you have a lawsuit coming after you, you have a vendor that you cannot pay back and they're coming after you, or you have creditors coming after you for debts that you owe for the business or the rental properties, this will shield your business's LLC from any of those liabilities. The other benefit of this is that when you pass away, the business is going to avoid the probate process. It will stay inside the irrevocable trust. Your backup trustee will take over the management of the LLC membership interest and they can distribute that asset out to your family. Now, for the rental properties, what we like to do is separate those out into their own individual LLCs. We do this for two reasons. The first one is that the rental properties will have asset protection from each other, and then the other one is going to be that our personal assets have asset protection from any liabilities related to that rental property. And so if you have a tenant lawsuit coming after your rental property, it's coming after the owner of that property, which would be the LLC, and that lawsuit is then isolated to that LLC. So our business and our personal assets like our family home would be protected from that tenant lawsuit. And the reason we split them out into individual LLCs is because if a lawsuit is coming after one property, it's coming after the owner of the property, which would be the LLC, and it can access all of the properties inside of that LLC, so it can literally wipe out your entire rental portfolio. When you separate them out into individual LLCs, it isolates the lawsuit to the one property that has the lawsuit coming after it, protecting your other properties inside of your portfolio. The third thing we're going to talk about is creating a succession plan for the business operations. You have crews depending on you, you have contracts that you have to fulfill, and your family has no idea how to step in and run that business on your behalf in the event that you pass away. A succession plan would turn your business into a transferable asset instead of a liability for your family. We're going to break this up into two different sections. The first one is going to be if you're planning on selling that business. The other one is if you're planning on keeping the business inside the family. If you're selling the business, you want to create a letter of intent or a buy-sell agreement with a top employee or an outside purchaser. Then you can fund that with a life insurance policy, so in the event that the sale of that business is triggered by your death or a disability, your family's still going to get paid. And if you're keeping it in the family, you want to make sure that you're creating operating instructions so your family knows how to step in and access all of the accounts, who to call for vendor relationships, who to call for maintenance, etc. And if you're keeping it in the family, you want to create operating instructions so that when your family steps into the management of that business, they know exactly how to run everything. This will be anything from taking service calls, which vendors to work with, which employees to send out for which types of jobs, how to quote jobs, etc. Then you definitely want to make sure that you're starting to train successors to step into your roles when you pass away. Then you want to consider gradual ownership transfers or grantor retained annuity trusts. That way you are not giving them a lump sum distribution of the ownership of this business and creating a huge tax bill. If you don't have a business succession plan, it puts your family at risk. The reason being is that the business loses the key player that runs the operations. If your family doesn't know how to run the operations, the value of that company is going to drop very drastically, which could force them to do a fire sale. Step 4 is using a life insurance trust. This one is optional. You are not required to do this. There are some benefits to this. The big one is going to be that if the value of your estate with your business, your rental properties, etc. is reaching the federal estate tax exemption limits, then your irrevocable life insurance trust will allow you to keep the death benefits out of your taxable estate, equalize an inheritance if you're trying to pass the business down to one of your kids but not the other one, fund a buy-sell plan if your family needs to buy out a partner of the business when you pass away, and gives your family cash to cover estate taxes, personal debts, or business continuity if they need help with that. Now, it's not required, but it's going to help your family when you pass away. They won't have to sell assets to pay off any debts that you have or to settle with a partner of the business, and they could even invest that money and live off the distribution so they're not having to sell your assets just to fund their lifestyles. Step 5 is simple but often overlooked. It's creating an operating manual for all the operations that you have. The first one's going to be creating a letter to your family. It's going to explain what to do when you pass away, where they should go to access all of your assets, who to call, etc. Second one's going to be a business operation manual. This will leave instructions on how to gain access to the system, which employees do what, insurance information, payroll information, etc. A digital assets memo. This will create logins for all the softwares that your businesses use. Things like your banking logins, email accounts, vendor portals, etc. When your family takes over the business, they should not have to guess how to use a debit card or if the trailer in the driveway is titled to the company or to the individual. Step 6 is using smart tax strategies before it's too late. Again, if your state is approaching the federal state tax exemptions or you think it's going to in the next 10 to 15 years, these are the steps that we can take to reduce our tax liability. First one's going to be using lifetime gifting exemptions and giving money out to our family in intervals. That way we can reduce the taxable estate. Second one's going to be setting up GRATs or family limited partnerships. That way we can transfer ownership down to our family members. Also creating charitable remainder trusts if we want to give back to charities as part of our estate plan. We can harvest depreciation and cost segregation on our rentals to offset income so that we can reinvest the savings from that. If you want help setting up an estate plan for your plumbing company, your rental properties, etc., you want asset protection between all of your operations and for your family, you want everything to avoid the probate process and go directly down to your family in a very easy and clean way, click link in the bio, fill out the form, and schedule a time to talk to some of our team.